What if I told you that you could potentially access $100,000 without providing tax returns or jumping through endless hoops that traditional banks put you through? I'm about to show you strategies that most people never learn, not because they're illegal or shady, but because they require you to think differently about money and leverage. These aren't get-rich-quick schemes. These are legitimate methods that wealthy people have been using for decades. And the best part, most of them can be implemented starting right now, regardless of your current financial situation. What's going on, guys? My name is Stedman Waiters, and before I built my funding business, I was stuck in a traditional mindset, thinking that accessing capital meant begging banks for loans and providing documentation I didn't have. I played the victim. But here's what I learned after helping hundreds of entrepreneurs access millions in funding. The people who get money fast aren't the ones with perfect paperwork. They're the ones who understand leverage, relationships, and systems that most people don't even know exist. Now, before we dive in, let me be clear about something when I say without paperwork. I don't mean completely without any documentation ever. I mean without the traditional loan application process that takes months and requires you to prove your entire financial history. These strategies work because they're based on different principles. Here's the first thing you need to understand. Most people approach getting money backwards. They think they need to prove they deserve it before anyone will give it to them. But wealthy people think differently. They understand that money flows to solutions, not to people who need money. They focus on creating value first, then the money follows naturally. This isn't just mindset talk. This is practical strategy. When you understand this principle, you start to see opportunities everywhere that other people miss completely. The strategies I'm about to share work because they're based on providing value, leveraging relationships, and understanding systems that already exist. You're not asking for handouts, you're positioning yourself as a solution to problems that people are already paying to solve. And here's the key difference. These methods work fast because they bypass traditional approval processes that were designed to say no, not yes. The first strategy is business credit card stacking. And this is probably the fastest way to access significant capital without traditional paperwork. Most people don't know that business credit cards are typically no documentation if you have comparable credit. Here's how it works. Business credit cards have completely different approval criteria than other loans and lines of credit. Most business credit cards can be approved based on your personal credit score and a simple business application that can take 5 minutes to complete. But here's what most people don't know. You can get approved for multiple business credit cards in a short period of time, and many of them come with 0% interest promotional rates for 6 to 18 months. Let me break down the math for you. If you get approved for 5 business credit cards with $20,000 limits each, that's $100,000 in available credit. And if you're strategic about it, you can access most of that at 0% interest for over a year. It's essentially a 0% interest loan. Now you might be thinking, but I don't have a real business. Here's the thing. If you're thinking about starting a business, you can apply as a sole proprietor using your social security number. You don't need business bank statements and you don't need years of tax returns. The key is understanding which cards to apply for and in what order. Some banks are more generous with initial credit limits. Some cards have better promotional rates, and some applications are more likely to get approved based on your specific credit profile. I've seen people go from 0 business credit to $75,000 in available credit in less than 30 days using this strategy. The paperwork, a simple application for each card that takes minutes to complete. The second strategy is what I like to call strategic partnerships. And this is where you can access money without any traditional lending at all. Here's the concept. Instead of trying to get money from banks or investors, you partner with people who already have the resources you need. You bring the skills, they bring the capital, and you split the profits. Let me give you a real example. Say you know how to help businesses get more customers through digital marketing, but you don't have the money to start an agency. You find a successful business owner who has capital but doesn't have the time to learn marketing. You propose a partnership where they fund the operations, maybe $50,000 to $100,000 for software, team members, and initial marketing, and you run the day-to-day operations. You split the profits 50-50. The beauty of this approach is that there's no loan application, there's no personal guarantees, and there's no monthly payment. Your partner gets a return on their investment through profit sharing, or in other words, an equity split. And you get access to the capital you need to build something significant. This works in almost any industry. Real estate partnerships where one person finds deals and the other provides funding. E-commerce partnerships where one person handles operation and the other provides inventory capital. Service business partnerships where one person has the skills and the other has the resources. The key is finding people who have what you need and positioning yourself as someone who can help them get what they want. It's not about asking for money, it's about creating mutually beneficial relationships. The third strategy is revenue-based lending, and this is perfect if you already have some type of income or business revenue. Traditional banks typically want to see good credit and sometimes 2 years of tax returns. But there are companies that will lend you money based on your current revenue, not your credit score or tax return. Here's how it works. If you can show consistent monthly revenue of $5,000 or more with business bank statements, there are lenders who will lend to you based off of that. The approval process is completely different from traditional lending. Instead of looking at your credit score and tax returns, they simply ask for 4 months of business bank statements and analyze your actual revenue patterns. The entire process can be completed in literally 24 hours. This works for e-commerce businesses, service providers, consultant agencies, basically anyone who has predictable monthly revenue. And the best part is that repayment is typically a percentage of your daily sales, so it automatically adjusts if your revenue fluctuates. I've seen business owners get approved for significant amounts using this method when traditional banks wouldn't even consider their applications. The documentation required, simply bank statements or payment processor statements, which you can provide digitally in minutes. The fourth strategy is asset-based leverage, and this is about using assets you already have or can quickly acquire to access capital. Most people think they need perfect credit and extensive paperwork to borrow against assets, but that's not always true. There are asset-based lenders who care more about the asset value than your personal financial situation. For example, if you have a paid-off car worth $25,000, you can potentially get a title loan for $15,000 to $20,000 with minimal paperwork. If you own real estate with equity, you can get a hard money loan or a line of credit based primarily on the property value, not your income documentation. But here's what gets interesting. You don't always need to own the assets yourself. You can structure deals where you control assets temporarily to access capital. Real estate wholesaling is a perfect example. You put a property under contract with a small down payment, then use that contract to secure hard money funding for the full purchase price. You're essentially using someone else's asset to access capital for your business. Equipment financing works the same as well. If you need equipment for your business, many equipment financing companies will approve you based off of the equipment value. Not extensive financial documentation, they're secured by the equipment itself, so their risk is lower and their approval criteria is different. The key is understanding that asset-based lending operates on different principles than traditional lending. They care about asset value and exit strategies, not your tax returns and credit history. The fifth strategy is network leverage, and this is probably the most overlooked way to access significant capital quickly. Your network already includes people who have access to money, even if you don't realize it. The key is learning how to leverage these relationships ethically and effectively. Let me give you some examples. If you know successful business owners, they might be looking for investment opportunities where they can get better returns than the stock market. Professional networks are gold mines for this. Accountants know which of their clients have excess cash looking for investment opportunities. Real estate agents know investors who are always looking for their next deal. Business attorneys know successful entrepreneurs who might be interested in partnerships. The approach isn't to ask these people for money directly. The approach is to present opportunities where their money can work for them while solving your capital needs. For example, instead of asking for a $50,000 loan, you present a business opportunity where someone can invest $50,000 and get a 20% annual return, which is better than most safe investments they could make elsewhere. This works because you're solving two problems at once: their problem of finding good investment opportunities and your problem of accessing capital. And because it's based on relationships and mutual benefit, the paperwork is often just a simple agreement that protects both parties. The sixth strategy is platform leverage, and this involves using existing platforms and systems that have built-in funding mechanisms. If you're selling on Amazon and generating consistent revenue, they'll advance you capital to buy more inventory. The approval is automatic based on your seller metrics and not traditional credit applications. Payment processors like Square and PayPal offer similar programs. If you're processing payments through their systems and showing consistent volume, they'll advance you the working capital based on transaction history. Freelance platforms have similar mechanisms. If you're a high-rated freelancer on platforms like Upwork, There are companies that will advance you money against your future project earnings. The beauty about these programs is that they're designed to be fast and simple. The platforms already have all the data they need to make approval decisions quick, so there's minimal additional documentation required. Even social media platforms are getting into this game. If you have a business Instagram account with good engagement, there are companies that will advance you marketing capital based on your social media metrics. This strategy works because you're leveraging data and relationships you already have built. These platforms want you to succeed because your success means more revenue for them. So they're motivated to help you access capital quickly. Here's how to implement these strategies over the next 90 days. Day 1 through 30, focus on business credit card strategies. Research the best credit cards for your situation, optimize your credit profile, and start applying strategically. You could potentially have $50,000 or more in available credit by the end of month 1. Day 31 to 60, start building strategic partnerships and leverage your network. Identify potential partners and investment opportunities. Begin conversations that could lead to capital partnerships. Day 61 to 90, explore asset-based and platform leverage opportunity. If you have assets, research lending options. If you have business revenue, explore revenue-based lending programs. The key is taking action consistently, not trying to do everything at once. Each strategy builds on others and the momentum compounds as you implement multiple approaches. Let me be realistic about what to expect. You probably won't have access to $100,000 in your first month, but with consistent implementation of these strategies, accessing $50 to $100 in capital over the next 2 to 6 months is absolutely achievable. The biggest obstacle isn't the strategies themselves, it's your willingness to think differently about money and take action on opportunities that feel unfamiliar. Most people will watch the video, think it sounds interesting, and then go back to traditional approaches that take forever and require mountains of paperwork. Don't be most people. The people who succeed with strategies are the ones who understand accessing capital is a skill, not luck, and like any skill, it gets easier with practice. Your financial situation today doesn't have to determine your options tomorrow. These strategies work because they're based on value creation, relationship building, and understanding systems that most people ignore. Stop waiting for the perfect conditions or perfect credit scores. Start implementing these strategies and watch how quickly your options expand. If you found this valuable, make sure you subscribe because I share real financial strategies every week that you won't learn anywhere else. No theory, no fluff, just what actually works in the real world. Drop a comment and let me know which strategy you're going to implement first. And remember, the best time to start was yesterday. The second best time is right now. Peace.